Good morning, everyone. Welcome to this live intraday strategy webinar. Today is Wednesday, December 7th. Michael Boutros here with you this morning. Good to be here. Kelly, Mark, Pete, Raf, Saful, Steve, Ziad. Great to be with you guys all here. Adam, always a pleasure, my man. Eileen, as always. So we do have the BOC on tap at 10 o'clock. Keeping our eye on some of those dollar CAD crosses. We will look at some of those today. By popular demand, as I noted last night, lots of interest in pound yen. So I did take a good chunk of my night really examining that chart. We'll take a look at it. Puts us at some very interesting resistance right now. You did see the pair pull off an overnight trade. Pound yen will be first up on tap. We'll review Aussie dollar, which also made a nice little bounce in price, still holding the weekly opening range. So I warned you about that last night. You know, we did see really poor GDP numbers coming out of Australia for the third quarter, really missing expectations, even a downward revision to the previous print. So Aussie came off a little bit, held the weekly opening range low, and made a nice little rebound in overnight trade. Again, that weekly opening range is preserved. Still looking lower in Aussie. Euro Aussie, also another one that's on tap. Saw that continue higher along pace as well. Aussie Cad was another one I wanted to go over in detail today. I just wanted to highlight last night in the report, guys, you're coming in some pretty major support. So in the event of an Aussie rally, or in the event, I guess, of CAD weakness, Aussie CAD does look like a good one that could hold support. If it breaks this critical support barrier right now, we're likely to see some serious downside action. So at a major critical inflection point on Aussie CAD, we'll cover that. Euro dollar, euro pound, and dollar CAD from the previous updates. We'll take a couple of minutes to talk about the DAX, which broke key resistance. I tweeted that out last night. Hope you caught that. And the Nikkei, just another update on that. We talked about that earlier in the week, still holding that resistance level. So I don't want to get too excited, but it does look like we may see, again, some exhaustion there on the Nikkei if we do hold that slope resistance. Keep in mind, guys, tomorrow is the ECB interest rate decision. We are expecting some further announcements from the European Central Bank as far as the extension of the easing operations, also possible adjustments to the capital key, which is essentially dictates what assets they're allowed to buy. So we'll be looking for those announcements tomorrow morning. Keep your eyes on the euro crosses. Today, like I said, at 10 o'clock, we do get the Bank of Canada interest rate decision. Not really expecting much there, but know that's coming. 10:30, crude inventories. We'll definitely take a look at the crude trade as well. Conwell, I see you in the room automatically. All right. Anything I didn't cover, any other questions or pairs you want to cover, guys, feel free to throw on the message board. So let's jump right into price action. Taking a quick look here, just a relative performance of the US dollar heading into the open. You can see that the euro is actually the top performer, up 0.51%. Didn't get that pullback into 106.60 that we were looking at yesterday. We settled at the first initial support target. Again, we'll take a look at that trade. Pound up 0.4%. Kiwi up 0.13. Biggest loser. I'm sorry, guys. This is versus the yen. I'm off. Knew something looked wrong. Shouldn't change things too much as far as the percentages are concerned. There we go. Okay. I stand corrected. Sorry about that. Swiss franc top performer versus the dollar, up 0.66%. The euro is actually lower versus the dollar, but we're still holding key support. We got that pullback. Like I said, it came into the first support target. Didn't see 106.60 yet. Pound is up 0.57%. CAD with a nice rally pushing dollar CAD down 0.26%. Yen, biggest loser on the session, down 0.5%. So we will take another look at that dollar yen. I think someone asked about that yesterday at the close of the webinar. Okay, let's jump right in. Here is what the dollar index looks like. So to start the session, no change really. I'm just going to breeze over this one real quick. We talked about this yesterday. It's basically the former highs that we made from, I guess that's November of last year, or the December open of last year. We went through that. The high day close, okay, which came in just a couple of days later, takes us into 100 spot 02, and that's still a major key support here for the dollar index. Slope resistance, former resistance, now support. Still think you get a drag into 99.50. Major key supports at the yearly open again. bearish below the monthly open at 101.50. No change to the dollar index. Watch these levels closely. Again, think if you do get a pop higher, you look to sell that sub 101.50. Is that a large gap on the DXY daily on the trading view? For what? There's something wrong with the trading view charts right now, guys, on dollar index. I don't know if you've noticed on DXY. It actually hasn't updated the candle for today yet. This is still showing 12.6. Not really sure what's going on. I checked it on a couple of different sources. The trade is actually right at 100 spot 46, 48 right now. But for some reason it hasn't updated with the most updated candle. Levels remain unchanged though. Does that make sense? She says, oh, that's what I'm seeing. Yeah, something's up with their feed. I did notify them this morning, so they're aware of it, but price action is right. So continue to watch that 100 level, 100 spot 2 here, major key support, 2015 high day close. Okay, I'm going to segue right into the pound yen because there was a lot of interest here in the room about it yesterday, and then we'll go back into the dollar crosses, guys, and specifically some of the CAD crosses as we head into the BOC and crude inventories. Here's what sterling yen looks like. First on the daily chart. Really interesting. I was kind of mesmerized by this last night. Here's what it looks like, or what it looked like last night. No change as far as the major key resistance that we highlighted. You're basically looking at the upper median line parallel. Newly added pitchfork right here. It's off the August low, September highs, October lows. A 618 bisector, not a 50. Caught a nice pivot in price here. Resistance for 2 days, break, instant support. Nice little pivot here. The 618 just missed those highs and just caught the opening range low for this month. So I am watching this as near-term support. Now ahead of that, there's a lot to look at, and it kind of just grazed the bottom of it on the pullback that we saw in overnight trade. You're looking at the 200-day moving average. Again, take a back look. Last time we touched the 200-day moving average was way back here. You saw some resistance, support, kind of messy there. Really nice support touch, support, breakthrough, resistance for a couple of weeks. So it's been a decent pivot. So we'll continue to watch that. It's 200-day moving average. You got the highs that you made for the month of July. And you've got the monthly open, which comes in at 134.08. So this entire region, really critical near-term support here for pound yen. And that's, you know, in my mind, if we break below that, that's what would offer a little bit more conviction on a near-term downside play. Look, at the end of the day, this thing is still an upward sloping pattern. We're still looking higher, broader, constructive bias remains intact, but there's a couple of things to suggest it's at risk. I always tell you guys about these divergences above 70 being very weak signals you don't want to rely on very heavily, but nonetheless, it's there, recognizing the condition. Critical resistance in price, we just went over that. Okay, you got a swing low here from the pre-Brexit sell-off. Here's the Brexit sell-off. And the upper median line parallel. So a nice resistance catch there, pullback, now checking support. Watch for a break of this critical range. A downside move, you're essentially looking for a possible move all the way back into the median line. You got some couple targets ahead of that. And a topside break, of course, there's really nothing until this sliding parallel. Again, if we take a look back in price, basic trendline resistance extending off the highs that you made from August of 2015. Take a parallel of that to the subsequent low from September. Nice pivot, resistance, resistance, right there. Comes in around 148.60 or so, 148.55 I think I marked on last night's report. And then a basic 38.2 converges on the low close from April, and that of course takes you into 151.97, basically the 152 handle. Adam says, what's that? He says, Widowmaker. Yeah, pound yen, right? They call it the dragon too. Yes, it's a wide range ATR. I tried to give you guys a note of that last night. Keep in mind, a quarter of the daily ATR last night was still showing about 55 pips per scalp. So, you know, if you're newer to the strategy or you're just getting your hands dabbled with intraday trading, probably not the best thing to get started with. If you've been with us here for a while or you've been here on SB, you know that these wider swing trades can oftentimes offer some really nice opportunities. And another note that I always will be mindful of, guys, because I'm so near term and I tend to trade with more leverage, I'm much more in the defensive. Keep in mind that calling these trades, these turns is always tricky. And we're not trying to do that. But when we're near term trading, what we're doing is trying to recognize when the conditions are right for the market to be to stage such a reversal, i.e. sentiment is extended, momentum is turning, you're coming into a critical resistance. When all these things kind of line up, the more conviction that we have. So we're recognizing the fact that, yes, there's some divergence on the daily chart. We're into structural resistance. You're seeing a little bit of a kickback here as we make just the initial monthly opening range high. Could see some pullback here in pound yen. Okay, and if we look at the pound dollar and dollar yen, I wouldn't be surprised, right? Both of those trades correspondingly also favor yen strength, in my humble opinion, and pound weakness near term. What is the current range on the pound yen you are looking for the break on either way? So I noted it right here. It's 145.39 right here, and 142.50 into 143.08 right here. That includes the lower parallel, the 200-day moving average, and the monthly open, that range. 50 pips might seem like a little bit of a larger range, or 42 pips might seem like a little bit of a larger range for support. But Steve, keep in mind, again, you're working with a pair that has a daily ATR of well over 200 pips. So we got to give ourselves a little bit of a cushion. So look for a break of that range, 145.39 basically into 142. That's critical right now. And also, Steve, more importantly, guys, aside from anything Mike Boutros says or anything of the analysis, it's the objective monthly opening range now. And when the objective monthly opening range or weekly opening range, when these take place or take shape just below key resistance or key support, those are great trades. They tend to be awesome trades. So again, the risk is to the downside below structural resistance. The broader trade remains constructive, basically well above 138, this region here. Also keep in mind you have a basic trendline resistance or channel resistance off the highs here in purple. Broke, converges on the median line down near 138. Make sense? Eileen says, do you make much larger stop areas, more swing type trades on pairs like pound yen? So right, Eileen, obviously if the profit target is somewhere in the range of 50 pips or higher, yeah, our stops are typically going to be bigger. I tend to not favor one-to-one risk to reward ratio, which is kind of what you need to get into if you're getting really intraday, right? If you're targeting 25 pips on a euro trade, you can't really put a 10 pip stop. I mean, that's just cutting yourself too tight. But on a trade like this, yeah, I typically won't take a full 50 pip stop. So I'll tend to make them a little smaller, Eileen, for sure. But you still want to keep that in mind. Risk management on this type of trade is still very, very important. And you do have to open up your stops a little bit because you need to allow yourself some cushion for the volatility on intraday, swings. So I guess you could say that, Eileen. Yeah, it's maybe on larger ATR trades, they tend to be more swing-like. I don't want to define them any way per se, but just keep in mind, again, the larger ATR doesn't necessarily mean it's going to be a larger duration. We could still get those intraday swings of 100 pips, in a couple of hours. It's pound yen. Okay, makes sense. I still don't trade these often, says Eileen. I tend to not to either, to be honest with you, just because of this reason. But when the technical clarity is there, I have no problem jumping in. No problem. Obviously, the repercussions if you're wrong on a trade like this, yeah, it's going to hurt more. But, on these types of runs, when you're coming to critical junctures, the last time we wrote about pound yen was back on the 14th, if I'm not mistaken, guys, and we were coming into this resistance region. And I was saying the same thing. We're coming into resistance. We could see a pullback off this region. Even though we were wrong, the pullback only lasted one day. It was a major region of resistance where the breakout gave you that bias. That's the same thing here. That's why I like these trades, where even if, okay, it's coming into resistance, we're looking for a possible pullback. When you're wrong, real fast, and the market runs in the opposite direction. So you get that opportunity to kind of really see the effects, as it were, of a legitimate breakout. You don't have to second guess whether you were wrong or not. Here's what it looks like intraday. And again, another one where you're seeing divergence taking place all into the highs. Okay, here's subsequent higher high, lower high. Here's a resistance trigger that I want to kind of keep in mind. As long as we stay below that, the risk still remains. And here's the drop that we saw. Initial support, the top of that range, 43 was the monthly open. We turned just ahead of that. 43.29 I think was the low. So look for another, rebound, possible dribble higher here to test resistance, but I'm still looking lower below this upper median line parallel. This is a 2-hour chart, by the way. And here's what it looked like last night. So we got a drop from 144.50 down into basically 143.30. I do want to just check to see if that completes anything. Bear with me one moment. Okay. I wouldn't worry about that now. So basically, heading into the U.S. Open, looking for a little bit of a rebound here to see if we can get another trigger back on the short side while noting the risk sub 145.40. Again, need to break the monthly open to really validate more of a push lower. Keep in mind the monthly opening range is basically this spot right here. Initial targets would be 141. Soft target at 139. Okay? But more importantly, this is sort of that key region, that median line that I talked to you about on the daily chart right here. Okay, you have the previous high day close, and you have a 38.2 retracement just to the advance off the lows here. So those line up pretty nicely right there near 138. Kelly says, okay, with this in view, the yen should be getting stronger. Dollar yen lower. Gotcha. So Kelly, I don't want to necessarily just take a strict yen view across the board because I don't think it's quite there yet. I do. Again, just between us, I do like the yen reversal story near term. I do think you get a little pop higher. I guess we could take a segue into dollar yen real quick. This was DXY was $1 sterling and $2 yen. Let's do that, number 3. Okay, here's what dollar yen looks like real quick. So the story remains the same. I don't necessarily like playing it from here. Here's, the same thing, guys. I feel like a broken record with dollar yen here, but I know I like a spike higher into 115.50, 116, this major critical 50 pip range. I'd like a spike into there to get short. I need a break below the upper parallel here, former upper parallel. It's also the weekly opening range low. To get validation for a correction lower. Until then, so 113 to 113.30 to 114.40. You're trading 100 pip range, which takes 3 days to cycle. There's so much other opportunity, Kelly, that I haven't been able to get excited here about dollar yen. Even if you look at the 120-minute chart, look at the bottom there near the momentum signature, kind of flattening out. Kind of just straddling the 50 mark. It's not really my cup of tea. And it's the abomination. It does things like this where it fakes everybody out. Everyone thinks it's topping. You start getting people starting to load up. Then it rips higher, washes everyone out, and then reverses. I don't know if that's the case, but I do know that I would be interested in short exposure off 115.50 or 116. The same respect, Kelly, with the same respect, just like we were talking about in pound yen. If that 116 barrier gives out, this thing's going to run. There's really nothing until like 118.10, 119.40. I'll take you to the daily chart real quick. It's a big breakout if we clear this region. So I'm not even putting too much stock into this median line. It's really just the fact that we're coming into a key 618 retracement of a multi-year retracement off the 2015 high. That tends to be a big deal. Just higher at 116 that I was noting earlier. Some really clean swing lows. August 24th, 2015, January of this year. Go back even further, you still have some pivots here all the way from the start of the late 2014 trade year. So big region for dollar yen. Okay, you're seeing some consolidation here, looking for a downside break, but more importantly, from a trading standpoint, I'd be interested in fading strength towards 116. or buy or selling a retest of resistance on a break below, the monthly opening range low. Does that make sense, Kelly, of how I'm looking to play dollar yen? Again, I haven't touched it in a while, but that's sort of the game plan I'd move forward with. I hear you. I like November and have exited, all which were my dollar yen long, sterling yen long, and my short in euro dollar. Fabulous month of pips. Thanks, U.S. election. Yeah, right? He certainly did charge quite the rally. If you're trying to buy a house, interest rates are starting to move higher. I can tell you that firsthand. I was able to lock in something before that, but definitely you're seeing those move higher. Yeah, we'll see how long it lasts. Interesting look at the DAX and the Nikkei, guys, as far as risk market's concerned. I'm going to try to run into that before we close out the session, but DAX made a breakout to the upside while the Nikkei still continued to hold that resistance that we talked about on Monday, which is a very interesting setup. But let's jump back in. Aussie dollar. Any questions on dollar yen before we move off, or sterling yen? Okay, I hope that helps. I saw a lot of questions yesterday on the pound yen here in the room, so I thought I'd give it some time here. And certainly is highlighting some very interesting levels. We'll see if we can't get any structure to the decline. As soon as we do, if we get some sort of median line structure or something, I will note it on SB Squawk. Okay, Aussie. So I definitely didn't see those numbers coming as far as Australia was concerned and the weakness in the GDP sector, but here's what or the GDP figures, but here's what it looked like. So quarter on quarter, you're looking for a contraction of negative 0.1. You got a contraction of negative 0.5. Guys, that might not seem like a big deal, but Australia has only seen 3, that's right, 3 negative contractions in GDP on a quarterly basis since the 1990s. Okay, so it's literally been like over 20 years, or over the last 20 years, let me correct myself. There's only been 3 instances when we've seen quarter-on-quarter contraction in Australia. Again, don't take my word for it. Here's historical prices. Look for a negative print here. You won't find many. Here's one in December of 2008. Here's one in March of 2011. Before that, you got to go back quite a ways. Nothing here. 93, 1991. Last time you saw another contraction. So literally, it's sort of a big attention grabber. Now, as far as that's concerned and the fundies are concerned, obviously, markets didn't really take it that much of as a devastating blow, right? Also, the year-on-year print missing at 1.8 versus 2.2. You saw a downward revision to the previous read from 3.3 down to 3.1. So kind of a weak read here for growth in Australia. If we take a look at what markets are pricing in as far as overnight index swaps for the next interest rate move, you can see that we're still not expecting too much by the way of further easing from the RBA. And that's why I'm not too surprised to see that the decline didn't really hold. Okay, if we had seen this start to shoot up, and all of a sudden we're looking for a possibility of a March or April cut to the main interest rate here in Australia, then you'd start to see a little bit more of a market start to price that in, catch up with what expectations are saying. You didn't see that. Okay, heading all the way into basically the end of 2017, you're still only looking for about 25% chance that the RBA will look to cut rates. Okay, so taking everything in stride, right? Not taking any one data point and running with it. That being said, sort of the fundy background of it and how that price plays in, the levels remain completely the same. In fact, they're even cleaner because we got the initial resistance bounce that or reversal that we were talking about early in the week. You got the pullback off that level on the reset here or the retest. Again, that slope line held, which is this right here on the daily chart. And now you have a very clean weekly opening range just below resistance. Best case scenario. Best case scenario. We're favoring a downside break, but we need to clear the weekly low to get that validation. What that means is as we head into resistance, each time that we've touched that 75 level or even approached this key resistance, 74.90 and 74.98.9, 98, every time we've gotten into here, we've tried to take a short. It's worked out pretty well. That still remains the game plan. We need to clear the weekly lows to get this going. 73.80, 73.30, more important support down at 72.80 and 72.20. Major key regions of support for Aussie. Daily chart. This is the aftermath of the release. Went right into the weekly open range low and held. And again, here's your 2-hour chart. Bearish invalidation still up here. Questions on Aussie? That was number 4. Number 5, let's hit Mike. So are we seeing an Aussie trigger now on the 5-minute? Let's take a look. Oops. Oops. Aussie 5-minute. So yeah, a trigger just gave out here for sure. This is actually a really good example. I just want to see what it looks like from down there. Yeah, not bad. Taking it from the low in price. Actually, if we take it from the low in price, it would actually be from here. Okay, remember, always based on the low close. Okay, this is a spike low, which is lower, but the close actually comes off this. So that brings your trigger up like this. Makes it a 3-point, steepens the slope, and gives you an earlier mark. So I used to always make that mistake by just going with the low in what the oscillator is saying. Best case is always to go with the low in what price is saying, and always being mindful, obviously, that you're looking at the close lows. Doesn't matter what the wicks are saying. Quick way to just stop yourself is to do that. Okay, bring into a line chart. So yeah, the reason why this would have been a decent trigger for me is because of the trigger, obviously, but divergence into that trigger. So price action, higher high, higher high, higher high, lower high, trigger break. These tend to be good. The only reason I wouldn't take this trade, Graham, is because of where you are in time. Okay, U.S. markets are about to open in 30 minutes. I typically want to get this kind of trigger into the 9:30, 10 o'clock range. That's like your best case to when you actually want to execute on this. So yeah, maybe a trade like that I wouldn't have a problem getting into, but I'd be working with maybe a quarter of what my typical leverage size would be because just where you are in the day, in the session. Does that make sense, Graham? And also, one other thing you want to note is, we don't look at these independently, right, guys? These are things that we want to see when price is more so near resistance or support. So if this was happening on this mark, which we actually did get a trigger like that, that would be a more feasible trade, a more attractive trade. If we could get a stop on this rally against here, allotting for an 18 pip stop, which would be really tight, again, that would be much more interesting for me. But from where you are right now, you have to keep in mind where you are in relative price, not just the momentum triggers. I do like how you found it and how you eyed that one, perfect. But where we are in time and where price is going to be the other factors you want to keep in mind. Graham says, you always tell me that as these sessions are always at this time, right? Well, I try to do it before so that when we're done with the session, you guys can jump into the U.S. session with both hands knowing what's going on. That's done purposefully. I kind of screw myself sometimes because I miss a lot of the trades, but if it helps out, then I'm doing my job, Graham. Kelly says, damn, pal, you are so enthusiastic. I love trading with you. Hope you have room for me when I visit. My pleasure. Kelly, let me know we're in the area. We are in Lower Manhattan. Graham saying, thanks, you're more than welcome. Conwall, oil, silver, and gold in the end as leaving for a few minutes. Yes, Conwall, no worries, my man. I got you covered. Okay, any other questions? Let's move on. We're moving into the 9 o'clock hour, making good time, but we got a lot to cover. That was Aussie dollar. That was number 4. Euro Aussie, number 5. Last update from last night. Oh, and Aussie Cad as well. So here's what Euro Aussie looks like. I've been covering this with you guys for the last couple of days, and nothing's changed. In fact, I love where it turned. This was the bullish invalidation level. This was initial support held. Really decent trigger. This was the onslaught again of the GDP print, Aussie weakness, popping a nice little move higher in Euro Aus, still holding that slope resistance and pulling back. Nothing's really changed. I think you could see a little bit more consolidation here. If this ends up being some sort of near-term high and it breaks sub 43, we'll be looking for a drop right back into that critical support range down here. That being said, I'm looking to stay constructive while above that median line. Okay, again, here's what Euro Aus looked like last night. Boom. Rebound, resistance held. We're still holding within the confines of that range. Now, for Euro Aus, ideally, I'm just telling you guys what I kind of envision. Ideally, my favorite type of setup here would be a spike into 45.50, 45.70, and a short off this region. My favorite plays. I tell you guys this every single time I see it. 100% extension off the low. Boom, boom, boom. 618 retracement off the high. Okay, so your election sell-off. Confluence slope resistance. And more importantly, the daily chart. Look at this. Support, 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 break, resistance. That comes same exact level. Stop traffic, there's more. 100-day moving average, same level. So my sort of ideal play, as it were, would be if we could get that move higher towards 45.70, 45.50, the bottom of the range starts, might be an area of which you'd start to look for some more rigid resistance. Also would be our bearish invalidation level, those key inflection points that really change the bias. Northbound to 46, this thing will probably explode. That being said, a rally towards 45.70 is where I'd start to look for some more short exposure. So that being said, with sort of the broader picture in view here, also we talked about this yesterday, the divergence that you're seeing into the lows that we made does suggest to me that you're still looking for that stretch higher near term. So while above the monthly open, weekly open, this region here, still looking for one last stretch if we can get it back into those highs. And again, an area of interest for possible exhaustion, possible short entries. Plays in well with our overall broader bias on Euro strength and possible continued Aussie weakness. See if we can't get that near-term spike higher. Questions on Euro Aus? That is number 5. Okay, number 6, I just want to touch base on Aussie Cad. I highlighted this last night just because I was looking at it and I was tempted to do something, and this is a good way, guys. I don't want to really encourage this kind of behavior, but for me on my side is, especially if you're loaded up on some positions or you've been taking a stance such as the Aussie short, which we've been aggressively playing since last week. This is a good scenario where you're basically looking to offset some of that risk. And I think if we were to look for an Aussie rebound, I think Aussie Cad is where you might see that most abundantly played. And that's just because of the critical support barrier that I kind of checked out last night. And that's basically 98.60. Here's what it looks like, Aussie Cad. Let me show you the daily chart. Check this out. So basic trendline support off the lows. Take a parallel off the high from December. Basically caught the highs from this year. You got a little bit of an overshoot and a throw over here, but you basically caught it. That same parallel extending off the high from October of last year. You got a little messy there, but resistance, the break was a run, support, support, support. Last couple of days been pretty right on since the start of the month is support. just below that 200-day moving average. Add to that 50% retracement of the entire 2016 range. You want more? Here it is. The buy sector, 50 line for that current operative slope. Again, it's too early to really rely on this, but if this is in play, that 50 line, well, caught the low there last month, caught the opening range low for this month, also in that same region. So again, while our bias on the Aussie tends to be a little bit more bearish, or has been over the last couple of days, that still maintains its weekly opening range. So in the absence of that clear definitive break yet, here's another one that has a very nice support structure right into that 90-60 region. Extends a little bit lower into 98.46 or so, but pretty critical. Pretty critical. So here's what it looks like on the intraday chart. Okay, there's that 50% retracement. Again, there's that 50 line for that current operative slope to the downside. Bring this into a 4-hour, kind of get a better view. And you basically have a very clean, I hope that's clear on your screens at home, very clean weekly opening range. It doesn't get much more tidy than this. Boom, 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 support right where we expect it. Very critical region. You see a topside break of the weekly opening range, yeah, you have some targets, 99.55. Basically, you're looking for parity. Broader focus still remains lower, below 10060. If you get the downside break, you got a nice run to 97.60, 97.30. Big, big region. Major swing lows. 1618 extension from the decline off the high, or excuse me, a 618 extension. And that low that you made back in August 19th. What other triggers waiting then for longs on Aussie Cad? The time of day. I'd kind of want, look, the longs that you'd be taking from here, Eileen, would just be inside the weekly opening range. Okay, I'm not going to start targeting anything up here unless we get the break first. So the way I would play a trade like this is buy dips into 98.60, 98.45. As we get towards the monthly open, towards resistance, I'd be taking off 3/4 of that trade, leaving a quarter on, stop at break even. And I would continue to do that over and over again. If it runs, great. I got that quarter left on the trade. Let it go. If it pulls back because you're still in the weekly opening range and you expect it to be until it breaks, then you get stopped out at break even on the quarter and you look to do it again. Same way we played the Aussie rebound off resistance the last couple of weeks. So, I mean, let's take a look deeper. Here's a 30-minute. Okay, ultimately, I want to see the downside break, Eileen, but, you know, I'm not going to front run a break of a major daily critical resistance support. So, critical support region, rather. So, you know, the way to do this is to be getting on the long side on every bounce off support. Stops at break even, 3/4 off. If it happens, it happens. You get the breakout. You'll get stopped out at a break even on a quarter of your trade, basically on every move until you get the breakout. But that's how you play these opening ranges until they clear. That's one of the biggest mistakes. You know, we're charged with writing our biggest trading mistake of the year for daily FX, and it makes you kind of reflect back on your trading and try to really identify. It's a hard article to write on a yearly basis, I'll tell you that much, because you've exhausted all the mistakes that you've made. But basically, one of them is, you know, in these kind of conditions, you need to know what you're doing. And when we're in a weekly opening range, you know, I tended so often to take a quarter off and leave 3/4 of the trade looking for the breakout, and then I got stopped at break even in 3/4 of my position every time, which means on every gain you're taking a quarter of it, right? Not the best way to play it. In fact, when the market conditions are like right now where, you know, expect the unexpected, as it were, then you need to be much more nimble. I should be taking off more at profit and leaving less on in the event of a break. So if we do get it, you know, I'm still in the position. With the same time, if the range is just holding, a lot of times I got broken even at my entire position or 3/4 of it, just because I was looking to play the extension to the next target. That's all to say, Eileen, wait for the range to break, then we get that further validation. If you want to play the inside of the range, I'm cool with it, 100%. I'm all about it. But, you know, more nimble. Mostly all in, all out. Leave a little on. Sorry to beat a dead horse. I hope that helps, guys. Okay, makes sense, says Eileen. Hey, you're more than welcome. More than welcome. So yeah, look for 98.60 on a pullback would be another area. Or Eileen, if we get the breakout to the top side, look for a zoom and retest, and then play the extended targets to the upside. Remember, base case scenario though is that you do see that little bit of a bounce and then a crash through that support to move this lower towards 97.35, 97.60. All right. I wasn't expecting to spend this much time on Aussie Cad, but I hope that helps everyone. Oh, the horse is still running. Yeah, it still looks like it's going to make a run towards resistance. Remember, those dotted lines are the monthly open. Okay, 92, 99.20, 99.25. Would CAD rate statement push towards a break, says Horace. Has the potential, Horace. I can't, you know, and I don't know what these central bankers come out with and what commentary they're going to do beforehand, so I really don't know. I can tell you my personal expectation is you're not going to see a huge volatile break on the BOC because we're not really expecting them to change rates. The language, I mean, there's always the risk of the language, Horace. I don't know. You know how silly central bank talk can be. So certainly all CAD pairs are at risk heading into the release. Keep that in mind. If we do see CAD weakness prevail, a topside break above 99.30, yeah, in my mind, would shift this a little bit more near term for a rebound higher. Ultimately, we'd be looking to sell that, but near term, we'd be looking for a rally towards 99, 57, 99.80. In fact, let me just see what this looks like. Bear with me one sec. Huh. Interesting. Seeing some play there, some play there. Leave that on there. I don't want to stress it too much, but it looks like we might be on to something. Further highlights key support. Further highlights near-term resistance. All right. Horace, hope that helps. Okay, let's get the ball rolling here. Number 7, let's jump into dollar CAD since we're coming up on the BOC momentarily. Here's what dollar CAD looks like on the daily chart. You know, pretty clear on where we're standing here. We talked about this trade the previous session earlier in the week. Here's what dollar CAD was looking like. Oops. Okay. Daily chart. We're looking to highlight that major key support area into 132.32. We're basically still sitting on that support zone, confluence with basic slope support. The highs from back here in August, a 38.2 retracement from the advance off of the lows for the year. Excuse me, that's off the lows from June, not from the lows of the year. All that's to say is watch that support structure. That's really the major thing you got to keep in mind heading into the BOC today. Here's what the intraday chart looks like since the start of the week. We're looking to stay bearish below 33.67, 33.75. Again, highlighting that key critical support barrier into 32.30. So we kind of went for it. It stretched and missed just ahead of that and turned sharply and went right back into support. Here's what dollar CAD looks like right now. Here's 2-hour chart. Okay, there's that rally, missed right ahead of that resistance, turned lower, boom, and we're kind of just sitting on this support barrier. This is still critical. This is still critical. If you see 32.30 give way, you know, first of all, I think that would equate to a larger break in the dollar index and broader dollar pairs, okay, because this is a pretty big region. But if it does, look for a soft target at 32, nothing major, shave some off there. 31.40 would be a nice region. You know, go back to the daily chart and kind of look at some major levels here. 32 also represents, or just below 32 is going to be that 100-day moving average. But, you know, you can see the implications of this break here, guys. If you go back in price, there's really not much in the way of like major key support until you get into the lower parallels. So certainly the risk is there. Again, if you take a gunshot approach to my head, I would still think you're at risk for a rip higher before this thing turns over. Just on it just seems too clean here just to sit at support than just failure, but I could be wrong. Long story short, you stay bearish below 33.75. You look for a break below 32.30 to get this going. And again, with what the dollar index is doing, wouldn't be too surprised, right? Wouldn't be too surprised to see another move lower. Dollar CAD tests the lows again and holds. Kind of get that fake out move, giving the dollar a little bit of a reprieve here. It's been a pretty heavy trade since that high that we made just a couple of weeks ago into 102. Kelly says, I think this is the next good trade. It's setting up. I think it may hit 134.20. Yeah, so that you're talking about basically the just shy of the monthly open. I mean, you're at support, Kelly. If there's gonna if it's gonna make a bounce, this is sort of the best place to do it. All I can tell you is that 33.75 is still in my mind the bearish invalidation level. So near term, if it gets above that, you're probably going to have a little bit more fuel than that. A 618 takes you as high as 34.50. So we'll see whether you get a reaction and a pivot off this level or not. But coming off a nice support barrier here. Questions on dollar CAD? Keep in mind also, Kelly, that from a swing standpoint, we're looking for entries on the short side just below this. If I'm not mistaken, Jamie from last night was looking at, I think we were talking about 33.50 for an entry. I like 33.60, 70 as major key resistance. So he put his entry just below that. Yes, 33.50. Here's the entry. Yep, 33.50. Stop at 34.40. So hope that helps on dollar CAD. All right, running the clock down here. So let me run through. That was number 7. Number 8, let's talk real quick about euro and euro pound. Euro pound is one that we highlighted earlier in the week as well. Euro dollar ECB is on tap tomorrow, so I just want to give you a quick update on that. No change to anything we talked about yesterday. That initial support at 107.10 is what held. That's the January low. If you remember from yesterday, major key resistance on the near term in my mind still 108.21. Nice confluence there with the low that you made back in March of this year, and the median line coming off the highs from this year. Again, gunshot approach. I think you make another run towards the low. I still like 106.60 the weekly open, former 100% extension as sort of a launching point for that move higher. Long story short, guys, it looks like a very strong rebound off of a major key support. Euro dollar, I'm looking for a stretch into 108.20. Don't know if we get an opportunity to get a reset here with a move lower first. And you're heading into the ECB. So any positions that you have on board heading into tomorrow morning, it's likely to be pretty volatile because it's not going to be an interest rate decision, oh, we've hiked or not. It's going to be the details, the devil's in the details. I hate those sayings, but it is. What kind of adjustments are being made to the capital key? What's the extension look like as far as the time frame for further easing? Will there be additional easing, right? Who knows? So just keep that in mind on the euro crosses, but I think if they come out with a little bit more of a supportive, aggressive stance at easing, then you're going to see the euro pretty well supported. Although people will tend to think, well, does not water down the euro? Yeah, it will, but near term, you still might get this recovery higher. Ultimately, guys, we're looking to sell this, but on course of the rebound that we've made off of support, near term, I still think you're looking higher. All right. Euro pound. Here's what euro pound looks like, and then we'll jump into the commodities. Commonwealth Promise. Here's what euro pound looks like on a daily basis. If I can find it, here we go. Topside bias that we alerted you to earlier in the week has continued to play out well. Here's the 5th euro pound. Here's the daily chart. We had noted that we had came off a really nice support structure here. Didn't quite make it into the 200-day moving average, but you had a nice confluence, former resistance in red, 200-day moving average, slope support on the downside even, all converged right there, and you saw a very strong reaction right off it. So initially, you were looking for a break of 84.80, 84.90, and that 83.35 level. Critical initial monthly opening range and major areas of key support and resistance, right? So we were looking for a topside pop for a recovery here. That coincided very well with a euro rebound that we've been looking to play, coincided pretty well with a little bit of an exhaustion trade on the pound side, which has been rallying pretty hard. So it kind of makes sense to me to kind of look for that rebound and that break. Here's what it looked like to start off the week. Really nice descending slope lines. Again, had the weekly opening range taking shape right where the monthly opening range high is and right below resistance. Favored scenarios. Well, we've gotten the break. Here's what it looks like. Bring this down to a 4-hour just for the sake of showing you a little bit more of the key structure here. So again, really nice light slope lines, not really stressing them, but you can see they've been giving some guidance to price. There's that slope, caught the low. There's the break, move higher. I want to stay constructive now above the monthly open, which comes in at 84.65. All right, topside target's unchanged. You're looking for 85.67. You're looking for that slope line there, which takes you basically into the 86 handle. Keep in mind these are pound pips, so they're going to be larger in notional value, whether you're looking at it or if you're looking at it from an intraday standpoint, rather just keep that in mind as far as your targets are concerned. Also tends to be a little bit tighter of an ATR, so really cherry pick your entries on this one. I'd be looking for a pullback towards the monthly open again for entry on Euro Pound. Yeah, the grandpa trade, Adam. You can always tell who's been with us for a while, right? That's the years old nickname that it caught from me. Okay, that was number 8 and 9. Conwall. Let's do the commodities real quick, and then we'll jump into the DAX and the Nikkei, take a really quick look there. So here's what gold looks like. Or what are you stressing here, Conwall? I said, Mike, I'm long in gold. Okay, from 1168, target 1178 and 1186. $11.78, you're basically there right now, right? You probably just hit that. 1186. Okay, I need to take a closer look at price. I can tell you right now, I was just eyeing down this channel yesterday. I don't know if we added this in the webinar or if I was looking at this last night. But it had the weekly open basically converging on channel resistance really near term. So yeah, I like that break. I like the concept of a near-term recovery in gold. It's just from the daily chart, it's an ugly level. I don't know. I think I said this here yesterday too. We're in the process of writing the quarterlies, and I still think longer term you get that drawdown from here. Near term, on a dollar pullback, on dollar weakness, on a near-term recovery, on divergence into the lows, I'm with you on the recovery there, Conwall. I think you're on point. I like your target, although I don't necessarily have lateral resistance there. Obviously, that swing high that you're looking at, I see what you're looking at. The opening range high comes in right along those levels. Might be an aggressive stance, but puts the median line right around that target that you're talking about, 1186, right along those highs. Not a bad level. And if we just take into account the weekly range, Ooh, okay. Came in along the weekly open and the 100. No, I wouldn't necessarily stress that. Let's keep that. Let's kill that. Watch these levels near term, Conwall. Hope that helps. I'm just signing this out right off the bat here, but um, actually, let me just take a look at this too. Might be a better slope. Okay. Either way, the median lines converge right around that region. This is really sharp. I tend not to like using these ones that are very steep slopes, okay? They tend to fail real quick, and when they do fail, the break isn't typically going to be a breakaway where you get that play, that extended run. They tend to like dribble out. So I don't want to stress this, but in the near term, I do think it's a little bit more prudent to follow that slope just because, we're seeing that sort of gradient and launch off the low aggressively. So just watch this for now. But there's some near-term targets I'd be looking at. All right. Hope that helps, Conwall. On gold, he says, all this is because of your help. Thank you. Hey, you're more than welcome, Conwall. Cheers, mate. Here's what crude looks like. Or let me go over silver for you real quick. Here's what silver looks like. Also getting that breakaway trade right now as far as a clearing of the initial monthly opening range. I think on this one, the daily chart still has this median line, which I do want to watch coming as resistance. The only reason I want to stress this even more so right now, Conwall, is because it comes in with that low that we made back in, what is that, October? You know what I mean? So that converges pretty nicely on that 50 line. Let me highlight that for you. Basically right here. Whoops. 17, 11. Okay, so watch that for a near-term target resistance. Maybe why Aussie is running now. Commodities are breaking. Well, it's definitely going to be supportive, but remember, it's sort of the same trade, Eileen, right? If commodities are going to be coming off, let me take a step back. Keep in mind that the dollar has been doing its own thing. If the turnaround, this actually is a good segue into what we're looking at in equities. Here's what the Nikkei looked like. You guys remember this chart from earlier in the week? I don't know if it was yesterday or Monday, but that resistance still is that high is still in place. 100% extension from the advance off the lows. Median line extending off the lows. This is actually not the low that you made on the 15th of February, but the low that you made on the 11th. Fits slope a little bit better. Gives us convergence right here. Divergence in momentum. Price action making a higher high. Oscillator holding those highs back below 670. Don't want to call a high on this. Could probe and try to make another run at that median line, but the longer story short is you're seeing signs of exhaustion. You're seeing signs of waning momentum, right? It's a very different story from this when you look at what's going on in the German 30, in the DAX. I tweeted this chart last night, guys, and it's interesting because we're already on target. The first initial target with a breakaway above that resistance level we've been watching for months now is right here at 10,953, 10,983. That's basically consisting of the 100% extension, 2 equal legs up from the lows of the year, specifically made in February, and the 618 key retracement of the decline off the highs. Once again, my favorite Fibonacci confluence regions. So it's a big level. Which one's lying? Nikkei is finding some serious resistance there. German 30 or the DAX, depending on what you're looking at, whether it's a CFD, just made a breakaway of the high day close for the year of the 2016 open. We're already at initial resistance right here, 10,953, 10,983. So watch the broader risk trade is what I'm trying to say as far as this is all concerned on these major indices and commodities. Did I cover everything? Crude. We have inventories in just an hour. Let me just give you a quick touch base on that. Then I got to run. Look, we're still holding that resistance level that we talked about. Despite the fake out that we made above that June high, above that 1618 extension at 51.64, 40, this region here. Looks like the pullback is starting to gain a little bit more momentum, so I am looking for that to continue pace. Here's what it looks like on the near term. Remember, we talked about this calm wall. No change to any of those levels. Let me zoom this out for you a little bit. Here's a 2-hour chart. No change to any of those levels. You're basically looking for that drop possibly into 48.70, 48.90 to the downside. That's the monthly open. Nice pivot in price. Fibonacci confluence. Former slope support. Nice pivot. At this point, I also would like just to add on a basic retracement of the most near-term advance. See what that lines up with. Oh, 236 is right here as well. Look for that near-term support break. There you go. Ultimately, you want to buy this. It's not going to be in a broader downtrend, in my humble opinion. But near term, obviously, this is a pretty big region of resistance. So risking a little bit more of a drawdown near term on a spill below 50, basically 49.98. Okay, resistance near term is still going to be this critical region. So even if it rebounds off of this, this is the region you want to look for. You want to stay below this if, in fact, we're going to continue this correction lower in crude prices. Okay, I think I got everything. I need a drink of water, and I thought I talked a little too fast today, guys, but I hope you enjoyed the session. Good luck with your trading as we kick off the session. Again, BOC is on tap, and you have the crude inventories with the ECB looming tomorrow morning. Be a little bit lighter on those euro crosses as we head into that release. Quick reminder, Jamie's midweek strategy webinar is on tap at 12 p.m. Eastern here in New York. So he will be on tap later today. Don't miss that. And I will see you guys bright and early tomorrow morning. Same time, same place. Best of luck trading, guys. Cheers.